early, I think.
And Dan, let's talk about Nvidia too. I want your take on that name. Got hit today. We did see those reports could be delaying Blackwell. What did you make of those reports, Dan? And what should investors right now, if they're in Nvidia, what was your takeaway?
I think one, there was already some smoke in this area about buzz about issues with the design and how the performance was doing, possibility could be delayed. We saw that with AMD too. So it wasn't terribly surprising we're seeing this. And honestly, a 3-month delay is hardly fatal for Nvidia. They are ahead of the competition by years. So if it turns out to be like the Blackwell comes out 2 or 3 months late, it's really just kind of shifting a little bit of revenue, I think, more than anything that's fatal. What I do think is going to be important to keep in mind, though, is that Nvidia is trying to essentially do new chips at a cadence that we've not really seen in this segment before. They're trying to do something new every year, which is kind of like a smartphone cadence. That's typically not what we've seen with data centers, especially these kinds of like super powerful supercomputing type chips. So what they're trying to do is super ambitious. I think we're going to see a lot more periods like this, both not just with them, but with other chip makers where they're trying to move very fast. And there's going to be probably some stumbles and obstacles they hit along the way.
Dan, great to have you on the show. Thanks so much for taking the time to chat. Appreciate it.
Thanks for having me.
Nvidia's stock has dropped 21% in the past 30 days, wiping off $651 billion in market capitalization. After being valued at $3.15 trillion, Nvidia's highly anticipated Blackwell B200i chips are now valued at $2.5 trillion. An architecture design fault in the chip was found abnormally late in the production process, according to an insider Microsoft source exclusively revealed to the information. The B200 chip is meant to push the boundaries even farther, much like the H100 processors helped Nvidia surpass the $1 trillion market capitalization milestone by training the majority of large language models, LLMs. The second-generation chips are said to have 4 times the training performance of H100s and 30 times faster inference performance. Furthermore, B200s are expected to handle identical AI workloads with a 25x reduction in power consumption thanks to a 2.4x higher memory bandwidth for large datasets. Since Nvidia's AI chipsets are used by Apple, Tesla, Google, Microsoft, Amazon, Meta, and Tesla, any delay until 2025 will result in a significant loss of income. Timothy Arcuri, an analyst at UBS Group, estimates that B200 and GB200 superchips at 32,500 and 43,400 units, respectively, will make up 7% of Nvidia's total shipments by the end of January 2025. This would explain why, of the projected $34.5 billion, about $3 billion would have been missing due to the delay. Nevertheless, Nvidia still has a substantial supply of Hopper architecture, notably the H200 chips. The first indication that large-scale shipments of H200 are not anticipated until after Q3 came from Taiwan's Commercial Times. Taiwan's semiconductor manufacturing company said in June that all of its production capacity had been allocated at the same time. Put another way, since both fabless businesses depend on TSMC, AMD, Nvidia's rival, is unable to take advantage of Nvidia's delay. This maintains Nvidia's position as the primary funding source for the post-market downturn. With all these developments under consideration and analyst predictions, we'll talk about target projections and advice in today's video, so make sure not to miss out. However, before you do, if you'd like to stay up to date on Nvidia's most recent updates and the most recent news from the stock market, you can subscribe to our channel. We publish daily updates about the biggest shifts in market catalysts, so click the bell icon button to ensure you don't miss the most recent updates. All right, back to today's video.
Olivier, we all know that Nvidia is the bellwether, and they report later on this August. How important is this going to be in terms of an event for Mag 7, the leadership and the concentration in the market, and CapEx, specifically with Nvidia? If they are maintaining capital spending or even raising it, then that's going to be a big confidence booster. Do you believe that is what is going to happen? Is that the right way to frame it?
I think that's the right way to frame it. I think they're, the market share that they have and the demand pipeline that they're looking at should be enough. I don't think there's going to be any major issue there. Again, the one thing that I do keep looking at, and it's not a big deal, but it's something to be prepared for, just in case some of those numbers look a little bit weird, is TSMC and other fabricators may be boosting, bringing in a price increase that we may start to see in August, or at least in the fall. And so that's going to impact Nvidia, it's going to impact AMD, it's going to impact Apple, ARM, Qualcomm, MediaTek, all the major chip stocks that you guys talk about that are really relevant to this AI disruption. So that's my one caveat, that we may have to lower expectations just a little bit based on that eventuality, but that's it. Everything else is solid. Nvidia's solid, AMD's gaining, Qualcomm and MediaTek are doing fantastic in the device space. And obviously, we're seeing some really interesting launches with the AI PCs and Copilot Plus, with Microsoft getting behind this, Intel entering the market later this year, shipping next year, AMD entering the market in force now, Qualcomm already having a really good quarter with early sales of Copilot Plus PCs. And I think we'll even see the mobile space go up in the low double digits growth year over year, thanks to on-device AI. So to me, yes, Nvidia is a bellwether, but I don't expect any negative news from Nvidia at the end of the month.
A significant sell-off on Wall Street is causing volatility on the tech-heavy NASDAQ composite, which is led by Nvidia and Apple. Gil Luria, senior software analyst at D.A. Davidson, talked about the market's movement and his top tech stock recommendations in spite of the decline. Because they are covering their yen carry trade, some traders are selling. Because those traders sold, there is machine algorithmic trading that is making money. Following those two sales, index fund computers are also being offered. It's not as though someone woke up this morning and declared that the values of Apple, Amazon, and Microsoft had dropped by 5% from Friday. That isn't the case, Luria says. According to him, investors that base their decisions only on fundamentals haven't altered since Friday, and large-cap tech businesses have excellent future prospects. He continues by saying that some businesses will profit from artificial intelligence, AI, in the coming years, but the stock price does not currently represent this value. He cites Apple as one of those businesses with purchasing potential, stating that the company's AI integration will spur a cycle of iPhone upgrades. He also mentions Amazon as a potential partner, pointing out that as it develops its AI skills, its AWS, Amazon Web Services, division has more space to expand. So what does this really mean for Nvidia's stock? Let's find out, but first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button, subscribe to the channel. This goes a long way in helping us grow. That said, back to the video. AI remains worth watching segment for global investors in 2024. But how do you keep up with the AI sector and others that you may be interested in? I recommend trying Moomoo, a sponsor of today's video. Some features to discover stocks with investment potential has blown me away. You can use the industry chain to find companies throughout the entire AI sector, or use the stock screener to filter stocks according to your investment strategy. Having the option to set parameters like industry, market indicators, financial indicators, technical indicators, and more. Ultimately, discover potentially undervalued stocks and those that appear to show buy signals to help inform your strategies in an effort to capitalize on AI-related opportunities. At the same time, Moomoo is one of the cheapest trading platforms I've found. It offers zero commission on stocks, options, and ETFs. After comparisons, I've discovered the fees are among the lowest. Right now, new users who open an account using my link and make a qualified deposit can get up to 15 free stocks, enjoy a limited time 8.1% APY on idle cash for 3 months, and earn up to $300 cash reward for transferring in their portfolio. These rewards can be earned together, so don't miss out. And thanks again to Moomoo for sponsoring this portion of the video.
we're seeing play out within the market, very broad-based, but really a lot of the bulk of that selling action coming from some of these Mag 7 names that had been working now for so long.
Yeah, it's a continuation of the trade that we've been tracking for several weeks now, right? When you take a look at what's led the market lower since basically mid-July, it's been big tech, right? So it's not surprising on a day like today to see big tech leading the way lower. I've talked to a couple strategists this morning that have essentially argued it might actually be a good thing that big tech is what's leading the market lower. When you look at the sectors on the day, the fact that you only see consumer discretionary and big tech lower than the S&P 500, you can pull a positive spin out of that, which is people keep wanting to sort of unwind their Mag 7 trade from those names you're looking at on your screen, but might actually be interested in putting money to work elsewhere. It's not a complete flight to safety panic move. It's more so, okay, let's reposition and get into something else that could work. I thought Kevin Gordon at Schwab made a great point about big tech earnings last week to me. He said it really was no different than the economic data story. It's just a story of expectations. And we had gotten to a point with a lot of these stocks trading near all-time highs that the expectations for them to keep beating earnings and raising revenue guidance and continuing to just go up, up, and up, at some point you just can't meet those expectations. And so it's not to say that those earnings weren't good, because I think a lot of analysts we've talked to over the last week look at most of those companies' earnings and say, the fundamental story is in pretty good shape. It's the fundamental story isn't quite as great as the market might have hoped. And so you're seeing people just pull back their bets a little bit.
Yeah, exactly. We talked a lot about the lofty expectations heading into earnings season and how high the bar had been set for so many of those Mag 7 companies. And you're right, because when you take a look, at least for all the ones that have reported, except for Nvidia so far, they have reported pretty solid. I mean, this is a broad stroke here, but I think the overall takeaway so far this earnings season has been they have been holding up. They have been showing impressive growth. But of course, the question is going forward, the momentum, or I guess to the extent maybe that some of that growth is going to slow, given those lofty expectations.
Right, and then you look specifically, we're talking big tech, and you look at what's down right now and what's down the most. Nvidia's down the most. Why do you think Nvidia's down the most? Because those expectations had gotten so lofty, right? And the stock was up 150% this year, more than that at one point. Tesla's down. Tesla had been ripping for the last 3 months. To see Tesla down 6%, a company where the fundamental story is in question and people are wondering about the earnings trajectory, it just adds up. And to see other stocks being weighed down by a lesser extent, I do think, again, you find a little bit of solace in sort of that market action.
Using trade data from Charles Schwab, investors were net buyers of stocks in July, but at a moderate pace. And although they kept piling into their favorites, like Nvidia, Schwab traders might be gloating about their decision to sell Tesla ahead of the August sell-off. Over a 4-week period ending July 26, Schwab investors dumped shares of Tesla, Palo Alto Networks, and Boeing, a component of the Dow Jones. The timing of those who dumped their Tesla stock before the company's 3-day meltdown this month was excellent. In July, Tesla's shares rose by around 17%. However, investors in Schwab escaped a bullet, a 9.5% decline since July 26. Tuesday saw the announcement by the U.S. Commerce Department that it will be giving SK Hynix funding totaling up to $450 million to support the construction of an advanced packaging plant and research and development center for artificial intelligence products in Indiana. The facility will feature an advanced chip production line to mass-produce next-generation high-bandwidth memory chips, which are currently used in graphic processing units that train artificial intelligence systems, according to SK Hynix, the second-largest memory chip maker in the world, which announced in April that it would invest about $3.87 billion to build the facility. The Nvidia supplier explained. Additionally, the department intends to make $500 million in government financing available for the SK Hynix project, which is anticipated to be eligible for a 25% investment tax credit. According to the government, the memory packaging plant for artificial intelligence goods and the Advanced Packaging R&D Center would close a significant gap in the American semiconductor supply chain and generate 1,000 employment. It implies that for the cutting-edge semiconductors that underpin artificial intelligence, the United States will have the most diversified and safe supply chain globally, Raimondo said reporters. No other economy in the world has more than 2 of these companies producing cutting-edge chips on its shores, the government continued. With all of these considerations, Nvidia is unquestionably a great buy, especially if you're looking to invest for the long term because the company hasn't reached its full potential yet. What do you think about Nvidia stock? Is it a good buy at the current price? Please share your opinions with us in the comments section, and don't forget to let us know what you think NVIDIA is worth. If you're interested in learning what other companies, like Nvidia, have been up to lately, click on the next video on your screen. We'll see you there.